Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we're looking for a three-wave structure to the upside in an ABC zigzag, where the most common target area for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the low to the high of A to the low of B, giving you a target area between the 69.1k and 71.3k. This is in confluence with some additional resistance to the upside. First of all, the blue box 68.2k to 69.2k, and then 70.7k to 72k. Arguably, the most impressive area of resistance above us is the weekly naked point of control at 69.125 on my Coinbase chart. In this scenario, we are then looking for an unfinished 5-wave impulsive structure to the upside in the blue count that you see on my chart over here. Here we're either still working on a wave 4, or we still want to see continuation to the upside in a wave 5 to at least hit the target area for wave C. Currently, the highest amount of volume in this most recent move towards the upside is in the high, and it is uncommon for an impulse to finish on a high amount of volume. This is typically something that you either see in a wave 3 expecting a 4 and a 5 to the upside, or in a wave B, which is a corrective high, or a wave X expecting a wave Y or C to the downside, after which you then expect continuation to the upside. Therefore, the probabilities are higher for price to sooner or later take out this high, which then means we might be looking for that potential wave 5 to the upside, with either wave 4 being finished and a continuation up in a straight line, or we're looking for a wave Y or C and then a continuation to the upside for that wave 5. If, however, wave 4 is not yet finished, we're looking for a bigger 3-wave structure. And the reason that at least we have to keep in mind that a wave 4 might not yet be finished is because your wave 4 over here in a flat ABC is a little bit shorter in time compared to your wave 2. The vertical line on the chart is a fib time taken from the high to the low of 2 to the high of wave 3, comparing wave 2 with 4 in time. And most commonly in Elliott waves, your wave 4 is longer in time than your wave 2, but as you can see in this case, the low is made before the 1-to-1 fib time, which is the reason that at least we have to consider a potential high here in a wave X or B, and then look for a wave Y or C towards the downside, where a minimum target would be the 0.618 trend-based fib extension taken from the high to the low of W to the high of X at 66.2k. In the more bullish scenario on the 4-hour chart, we are looking for a double 1-2, a 1-2 finished in blue, looking for another 1-2 in white, and then continuation to the upside. Important here is that your white count is a lower degree Elliott wave count. So in blue we have a 1, 2, 3, 4, 5, and inside the blue wave 3 we have the white count 1, 2, 3, 4, 5. So it's a sub-degree of the blue wave 3. Preferably in a double 1-2 structure, your lower degree 1 and 2 are a little bit shorter in time and price compared to your previous wave 1 and 2, as naturally these are the highest degree 1 and 2, and these are the lower degree 1 and 2. However, this wave 1 here at the moment is already longer in time compared to your blue wave 1. If you take a fib time from the low to the high of the blue 1 to the low of blue 2, toggle on the 1-to-1, then you can see we already passed the 1-to-1 here, which does lower the probabilities a bit for this scenario. But what you also don't want to see is this white wave 1 moving to the upside to hit the 1-to-1 at 69.1k, because if it does, then the white wave 1 is also longer in price compared to the blue wave 1, again lowering probabilities for a double 1-2 to the upside, which naturally therefore increases probabilities for an ABC, because here you do want to hit that 1-to-1, as that is part of the common target area for your wave C. Now locally, in this particular scenario, you then potentially have a finished impulsive structure to the upside, right? You're then looking for your wave 1, 2, 3, 4, 5. You don't really want to see price move all the way up to 69.1k. You still have a little bit of margin at least, but you do want to finish the impulse to the upside soon. But as explained, this high here has the highest amount of volume, which is common for either a wave 3, a wave B, or a wave X, which does increase the probabilities for price to sooner or later take that high. The weekend is notorious for its sideways ranges, and we do have a sideways structure here locally, which means time becomes important. And if we take a fib time from the high to the low of this structure, comparing this move down with the sideways move for a potential ABC or 1, 2 and then a continuation down in a wave 3, then you can see that this high here has been made after the 5 fib time. Now it is uncommon for a wave B or a wave 2 to end after the 5 fib time, making this sideways range a very long structure compared to the move towards the downside, which naturally therefore does increase the probabilities for price to sooner or later take that high. It is not an invalidation, it's just all about probabilities. The moment a structure reaches the 5 fib time, that is the moment that the probabilities go down. You have a relationship in a B or a 2 with the impulsive structure to the downside. I also marked the low of this range for the same reason, because if we compare this move to the upside with the range and take a fib time from the low to the high, then you can see that this low here was made after the 1-to-1, which is perfectly fine, but you didn't really want to see price move below this low once again, where you would then make a low around the 6 fib time, lowering the probabilities for continuation to the upside here, increasing probabilities to take the low. And if we then go to the probabilities of the different scenarios, then on the 4-hour chart we're looking for a retracement to come after a 5-wave finish structure to the upside. In the most bullish scenario, you would be looking for 1-2-1-2. However, the white wave 1 is a bit longer in time compared to the blue wave 1, which does decrease the probabilities for a double 1-2. However, for wave C, we need price to move towards the upside to at least 69.1k. Currently, the highest amount of volume locally is in the high over here. It's in the recent move to the upside yesterday. Generally, that is more common for either a wave 3, a wave B or a wave X, which does increase the probabilities to sooner or later take out this high. So generally, we are looking for a retracement to come soon on the 4-hour time frame, either directly or first moving up to hit the target box and then look for a move towards the downside. On a 15-minute time frame, this range here has been going sideways for quite long compared to its impulsive structures, and that has an impact on the probabilities as well, as this high has been made after the 5 fib time compared to this structure to the downside, which is less common for a wave B or 2, increasing the probabilities to sooner or later look for the high. Take the high and the probabilities increase to take the 67.5k high as explained. Take the low and probabilities increase to take the 66.2k low over here. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.